welcome to Retire Smart Maryland. My name is Cynthia DeFazio, and I'm joined today by Ozzie Culhagil and Prashant Sabapathi of Elite Income Advisors. Ozzie, how are you today?
I'm doing great, and yourself?
Fantastic. Always a pleasure to see you. Always
Likewise.
Look forward to it. Thank you so much. Prashant, how are you?
I'm doing great. It's good to see you.
It's good to see you both as well, because I know that you've been so extremely busy and things have been just popping at the office, if you will, but I always love that you take the time to come into the studio. So today's show, I want to talk to you a little bit about obviously something that's so important to talk about right now, market volatility. Like nothing makes retirees feel more apprehension or nervousness, if you will, than market volatility. Everyone loves when the market's going up, but when it goes down, it's so scary. So I have to ask you, Ozzie, do you like roller coasters?
Well, personally, I do not like roller coasters anyway because I don't like it.
Okay.
But in the market, when we look at it, like you say, when we ask the questions, the client, you know, can you take risk or any of the stuff? And they say, yes, I can take the risk. So you know the market is going to go up and down, up and down. I'll be fine. Then the moment the market started to go down, the phone started to ring, and they say, I don't like this. And I say, that is the roller coaster. That's what you're signing up. It's going to go up, it's going to go down. What matters is, what's your income going to be?
True.
That's the bottom line.
Very, very good point. Prashant, let me ask you this next question. One day last year, the Dow Jones Industrial Average dropped off 900 points. The year before, it dropped 2,997 points, almost 13% in one day. These are just two examples of what seems to be consistent ups and downs of the stock market. If I'm a few years from retirement or just starting into retirement, should I be concerned? Great question from a viewer.
Of course you should be concerned, right? But it really, you have to have perspective with it, right? I can remember at least 3 days this year where we've seen the Dow go down more than 800 points, and that's a pretty scary thing to go through. It's natural. If you feel anxious about that, you're a human being, okay? It's totally natural to feel anxiety about that or feel some stress about that. And I think what makes this market so challenging is all the traditional things that are quote-unquote lower in risk that back in 2008, we could go to. Things like bonds, whether it's long-term bonds or intermediate-term bonds, those things, you know, historically have tended to be a lot safer. But this year, as interest rates have started to go up, those things have just gotten crushed. And I have some interesting statistics here. I wanted to share this with the audience here. So I looked at three major funds out there and kind of what their risk was. And so what I did was I looked at the Vanguard Total Bond Index, okay, largely considered to be a relatively low risk asset. At points during this year, down 13%. Okay, iShares 20-year Treasury Bond ETF down 26%. At some point in this year. Vanguard Long-Term Bond Index down 25%. Wow. And so why does this matter to our audience? It matters because the days of just being able to take all your money out of the stock market and put it into the bond market as a quote-unquote safe haven, those days are over now. We need to look for alternative ways to protect your assets to make sure that your plan is still going to produce a high probability of success. Okay. I was just doing a review with a client, and you know the market's down this year, and he was a little bit stressed out naturally, and that's okay. But what I like to bring it back to is, look, losing money, it's part of the process. What we really need to be focused on is, has your plan's probability of success drastically reduced as a result of the market going down? And believe it or not, when we did this review with a client, we found, okay, yeah, you're down a little bit this year, and that stinks, but your plan is still in position to be highly successful over the long term. And when you think about it from that perspective, it gives you a lot of comfort. So don't let losing money be the end all be all. Understand how losing money feeds into whether your plan is going to be successful. I think a lot of advisors don't do a good enough job of articulating this to their clients.
Absolutely. And I should also ask you, Ozzie, what about if someone is in the red zone of retirement? Why are they specifically concerned right now, like right in that red zone?
So I guess when you say the red zone is like they're at the finish line, they're
Right
getting
there.
ready, they're going to retire, and they're looking for the perfect retirement in their lives. The first question I'm going to ask, do you have a good roadmap in your retirement? What are you going to do? And are you put your money in different buckets to make sure that the first bucket, I'm assuming 1 to 5 years, you're going to take some money out, and the other bucket's 5 to 10 years, and the third bucket is 10 and over.
Okay.
Are you proportionally put your money into these buckets and to make sure that you are getting the income you need?
Yeah.
Like you said, when you're in the red zone, when I say I'm in the red zone, I like to be more safe and secure than any other places, because what happens, someone was going to retire at the end of this year and all of their money is invested in the market.
Yeah.
And the last time I checked, market was down a lot since December. So
Sure.
what is that going to happen? You're in the red zone. I guess maybe you need to work a couple more years. Do you really want to take that risk in your portfolio?
Yeah.
Yeah, yeah.
And I think it comes back to something we say around the office all the time. I write about it in my book too. It's this idea that the closer and closer you get to retirement, we say losses hurt more than gains help.
Yes.
Right? At some point, it's actually more important to protect your principal than it is to actually make money.
Yeah.
And that sounds strange to a lot of people, because in America, we're conditioned that your money should always be working for you all the time. And we oftentimes think, if we're just protecting our principal, that our money's not working for us. And this is one of the biggest misconceptions I've seen in doing this work for the past decade, is that losses hurt more than gains help. Let's shift our thinking to address that fact.
Sure. So it's very important for someone to understand their risk tolerance overall. Is there a formulation that you use, Prashant, you and Ozzie both in the office, to help determine what that should be and if they're okay?
Yeah, so I think it comes back to a great point that Ozzie brought up earlier, which is how much income do you have coming in? And is that income going to give you enough to live the life that you want to have? And why is that important to risk tolerance? Because if you have a certain amount of income coming in, let's say that Social Security and pension give you about $4,000 a month.
Okay.
But in order for you to live your most fulfilling, abundant retirement, you need $6,000 a month. Well, right there, we have a deficiency. This is what I would call the income gap. If we have 4 coming in, we want 6, we're deficient by $2,000. Well, that $2,000 gap needs to be filled with your retirement portfolio. But what happens if your retirement portfolio loses 30, 40% of its value? Are you going to be realistically able to create that $2,000 a month for the rest of your life? So one question every viewer can think about today is, on whatever money you have saved for retirement, doesn't matter if it's $100,000, $500,000, or $1 million, ask yourself, how much can you lose before you begin to feel uncomfortable? And then from there, we can put a roadmap together that can show you an anticipated best case, but more importantly, an anticipated worst case scenario. And if your worst case does not jive with that answer of how much you could lose before you begin to feel uncomfortable, then it's an immediate red flag. Okay, so what I want to do now, let's open up our phone lines. We have 10 spots on today's show. And so when you call in to the phone number, it's 833-308-5200. You're going to be able to grab one of these 10 spots, and you're going to visit with me, Ozzie, and our fantastic team at Elite Income Advisors. We have 2 offices, one in Ellicott City, one in Annapolis. When you come in to visit with us, we're going to dive deeper into these concerns. And I know that you have these concerns because people tell us about this every single week. We're going to talk about the market. We're going to talk about inflation and where your income is going to come from. If you're concerned that you cannot withstand another down market before retirement, pick up the phone, give us a call. We also have a QR code on the screen, so get your cell phone out, take a picture of it. It goes directly to our calendar. It's no obligation and completely complimentary, but the spots are limited. So let's get on the phone and let's come in and get this stuff taken care of.
And I love the QR code. What a phenomenal idea.
It's 2022. We got to get with the times, right?
It's fantastic. Prashant, thank you so much. Ozzie, thank you so much. To the viewers at home, once again, that number is on your screen. The number is 833-308-5200. 833-308-5200. We know you have a lot of questions for Ozzie and Prashant about how to plan your perfect retirement. They are offering you that opportunity today to call in. 833-308-5200. Today's topic is all about market volatility. So when we come back, I'm going to ask Prashant and Ozzie, should a retiree be in the stock market, or can it be avoided overall? So stay tuned. You don't want to miss their answer.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no obligation, full-blown financial review today.
And welcome back to Retire Smart Maryland. My name is Cynthia DeFazio, and I'm joined today by Ozzie Culhagil and Prashant Sabapathi of Elite Income Advisors. Gentlemen, a great show we're having today, talking about such an important topic, if you will, market volatility. Wow, it's a big one. So the question I think a lot of people are wondering, perhaps in the viewing audience today, Prashant, I'm going to guide it to you. With that being a concern, should retirees be in the stock market, or can it be avoided overall?
Everyone has to have their plan in place, and it's got to be unique, right? So should we be in the stock market? It's a personal decision that's based on things like risk tolerance. It's based on how much income you have coming in. But one way we like to look at it is to really start to segment out our retirement into buckets. Ozzie kind of alluded to this in the first segment, but how we like to think about retirement is, okay, I've saved $500,000 for retirement, okay? But when I retire, I don't need all $500,000 all at once.
Right.
I mean, hopefully I don't.
Right.
And if that's the case, why don't we take some of this money, maybe put it in a place that we're able to not lose a single penny of it. And maybe we're able to create our own pension with that money, and that still leaves us with some other money that we are invested in the market that can grow over time, right? Now, everyone's plan's a little bit different. There is no such thing as cookie cutter advice that we can give you. But when you come in to visit with us and you get that Retire Smart roadmap, what it's going to include is not just an overview of your income, but it's going to go through what I would call a 3-bucket plan, where you can see how shifting money between these buckets actually makes your plan a little bit more efficient, and it could actually turbocharge your retirement income, which I think is sweet.
That is sweet.
Yeah.
That's awesome. What a great idea. Ozzie, let me ask you a question. How do you provide a consistent income strategy for your clients that are coming in that are perhaps concerned about market volatility overall?
I think Prashant mentioned that a little bit of, earlier when he was answering your question, is that people think that the pensions can only be provided by the employers or the government, that is not true. These days, there is a lot of other options out there. The people who is watching these shows, they can create their own pension. They can create your own guaranteed income for life. Like Prashant said, what we need to do is we need to look at our roadmap to see where we are on the income-wise, and if we need $2,000, $3,000, $4,000 extra a month, how can I create that income and I don't have to be subject to the market list?
We had a client come in recently. Actually, it was a viewer from the television program. came in recently, had about $800,000 saved for retirement, and we found that there was an income gap there of about $2,500 a month. And so his question was very simple. How do I close this gap? So we're putting together this 3-bucket plan, and we're looking at all of his money's in this red bucket, red meaning risk of the market, right? Goes up and down.
Sure.
And he said, I just don't want to have to deal with subjecting my $2,500 a month that I need to a market that could drop 15, 20% like we've seen earlier this year. And so it was actually a relatively easy solution. All we did is we took $400,000 from his red bucket and we shifted it over into a green bucket and used one of these really cool strategies that Ozzie just alluded to, which is designed to protect his principal and generate for him an income. And just with $400,000 of his retirement assets, we solved that income problem with a stroke of a pen.
Wow.
I mean, how powerful is that to have some kind of sense of relief and security that your income is going to be taken care of?
Absolutely.
I just think
Incredible
it's
peace
so
of
powerful.
mind.
Yeah.
It
And
is.
also, you have to think about this when we did this solution with Prashant. Like, so do you think that that person is going to be more worried about the market or less worried about
Great
the
point.
market?
Great point.
Yeah, absolutely. Well, I also want to talk a little bit, Prashant, about rebalancing, if you will.
Yeah.
Are you an advocate of rebalancing a portfolio?
Sometimes.
Okay.
And the reason I say that is we don't want to be in a situation where we're buying high and selling low. In a perfect world, we want to be buying low and selling high, right? So when I say sometimes, it's because there is no one-size-fits-all answer to this, right?
Yeah.
Everyone's plan is a little bit different. For one person, selling out of the market at a time like this may actually be a good idea. For someone else, it may not be a great idea. I'll give you an example. I was talking to a client who was a little bit concerned about market volatility, but she's 12 years away from retirement. And I said, look, we have to look back through history. And by the way, history is no guarantee that it will repeat itself. Past performance never guarantee of future results. But with that being said, let's maintain some perspective. If you're 12 years away from retirement, you maybe have some time to go through one of these market downturns. And in fact, putting more money into the market for that client was a great thing to do. And so we were able to take advantage of a market decline.
Okay.
And so should that person be rebalancing and selling out at a time like this? I would argue maybe not, right? So everyone's situation is a little bit different.
Okay.
You cannot get cookie cutter advice. Do not get armchair advice. That's what I call it. Don't get advice from somebody who does not have to deal with the consequences.
Absolutely. So, Ozzie, really what it comes down to is having someone come in to sit with you and Prashant, going over exactly what their dreams and goals are for retirement. Are any two plans and ideas exactly the same?
It's never the same. The ideas, could be similar to each other, but everyone's situation is different. Like Prashant say, someone needs a $2,500 extra a month, and maybe someone doesn't need extra money, and that they want to be invested in the market. What we are trying to do is we try to create them the roadmap to see what the next 20, 30, 40 years is going to look like. And are they going to be comfortable with the income in today? And we should calculate the inflation, what is going to be in the next 10, 20, 30 years. And we want to make sure that they have all the income they need. Never worry about the market whatsoever. Prashant said before, look at the glove compartment, just take out your map and make sure that you're not going to get lost.
Exactly.
That's what it's all about. So it's a great opportunity to open up the phones. I know people are concerned about this stuff. We hear about it every single day. If you're uncertain that you can withstand another down market, if you have gotten crushed in your portfolio this year, it creates anxiety, and this is your opportunity to give us a call right now. It's 833-308-5200, or take out your cell phone, scan the QR code. It goes directly to our calendar. Our team will set you up with what we call a media response kit to help you get prepared for that first visit to our office. So pick up the phone, give us a call. Limited number of spots on today's show, 10 spots only. So call in and get yours now.
Prashant, thank you so much. Ozzie, thank you so much. To the viewers at home, the phone number to call is on your screen. That number is 833-308-5200. Again, we know you have a lot of questions for Ozzie and Prashant about how to plan your perfect retirement. They have the answers for you. We're going to take a very short commercial break, but don't go anywhere. When we come back, I want to talk a little bit about sequence of returns. Please stay tuned.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
And welcome back to Retire Smart Maryland. My name is Cynthia DeFazio, and I'm joined today by Ozzie Culhagil and Prashant Sabapathi of Elite Income Advisors. Gentlemen, before we went to the commercial break, we talked a little bit about coming back and talking about sequence of returns. And Ozzie, we had an excellent viewer question, or Prashant rather, I'm going to guide this directly to you. It says, there is a concept called sequence of returns, and I was wondering if you could explain how negative returns in the market can double down losses that you take as withdrawals in retirement.
So we talked about that old saying on Wall Street. What do we want to do? We want to buy low and sell high, right?
Absolutely.
But when you're entering that withdrawal or distribution phase of your lifetime, maybe you need to take money out of your retirement account to supplement your income. Well, if the market goes down 2 or 3 years in a row and you're compounding that by taking withdrawals, are we buying low and selling high? No, we're doing the exact opposite. We're buying high and we're liquidating at a low point. And so that is what's called sequencing of return risk. It means that if we go through 2 or 3 bad years in a row while you're withdrawing money, it very well could mean that you run out of money a heck of a lot quicker. And that is a huge concern, especially in this market. We've seen 10 years of really good markets, past decade or so. This has been a precipitous and very quick drop, and it's causing a lot of anxiety. So make sure you're protected against sequence of return risk. A great way to do that, have different buckets of money that are intended for different things.
That makes sense, absolutely. And Ozzie, I know that you don't have your crystal ball with you.
Not today.
Right, you left it at home. But where do you see the market 30 years from now?
So when we look at the market returns and everything, in the 30 years, we should be up. But do you really want to look at your future with what you've done in the last 30 years? You save all this money, and you don't know what's going to happen in the market. Like you say, I don't have my crystal ball. And what I care is all about the income. I just want to make sure that you have all the income you need for the next 30 years, and you shouldn't be worried about the market. Market is going to go up and down, and next 30 years, I hope it's going to go up, but no one can predict that. So just to make sure that you have your roadmap with you and you have enough income coming in.
All right, Ozzie, thank you. Prashant, what kind of advice can you give our viewers at home that are perhaps worried about market volatility? What nuggets of information would you like to share?
So, couple things here. Number one, it's important to invest in good times, but it's equally important to invest in bad times, right? We say that because being in the market is a long-term type of endeavor, a lot of people are able to make the most money by investing in bad markets and waiting for those markets to recover, right? So that's number one. Number two is you want to avoid completely jumping in and out of the market, because trying to time the market exactly is something that's impossible, right? And we know this because years and years of research have shown that no one can really time the market, okay? And then number three, in terms of advice, is understand how you're going to generate a retirement income from those investments. I mean, you might get all these statements from your broker or your custodian, but nowhere on those statements does it tell you how much income you can withdraw for the rest of your life without ever having to run out of money.
That's true.
And it's an interesting thing to think about. When you start to think about your retirement, not in terms of dollars, but in terms of how much income they can generate for you, it's a shift in the way you think. And I think the most successful retirees get out in front of this and plan for this ahead of time.
Absolutely. And obviously, Ozzie, we can't control this, but negative news we know sells. People are just glued to the fact that a lot of the negativity, they just get soaked up in it. What kind of advice and guidance can you give people to look at the positive side of what's going on today?
Well, there is a lot of positives going on. Like what? You woke up today and you're still alive. It's
That
a positive
is a positive
thing,
right there.
And again, I'm going to say the same thing over and over and over. It's all about income.
Yeah.
If you have all the income you need, you made the roadmap, and you know how much you're going to get in the next 5, 10, 15, 20 years, do you really care what happens to the market?
Yeah.
And you shouldn't care. And sometimes our client says, oh, I don't care about the market, then they're looking at their portfolios with other brokers and so forth, like every day. That shouldn't be their job.
That's true.
What they should be doing is enjoy your retirement.
Yeah. Yeah. They've worked their whole lives to get to that point.
Just be happy.
Just be happy. I think there was a song, right? Don't worry, we could go that way. Prashant, I know that you and Ozzie have a special offer to present to the viewers at home today. Let's talk about what that is before we say goodbye to the viewers.
Yeah, and first of all, I just want to say thank you, okay? We have to pause and say thank you to our viewers. I mean, you keep us busy every single week. We have a team full of folks at the office who are helping us meet with people, put your plans together. It's truly a team effort at Elite Income Advisors. So thank you to our incredible viewers, and thank you to our team at the office. But this will be our last chance. We're winding down here in the last minute of the show. You got to pick up the phone, folks. You got to pick up the phone and call right now. It's 833-308-5200. And I'll tell you what, you're a good person to call to call in if you're concerned that this market has gone too far for you, too far down, right? You're a great candidate to call if you don't know where that income is going to come from. If you don't know how to coordinate your Social Security benefits with your tax plan, this is a great opportunity for you to get your Retire Smart roadmap in place, which will ultimately help you to retire smart, Maryland.
Prashant, thank you so much. Ozzie, thank you so much to the viewers at home. Thank you for spending time with us today. That number to call once again is 833-308-5200. Be safe, be happy, be blessed. We look forward to seeing you back here again on Retire Smart Maryland. Take care.